Hello friends, a very warm welcome to my channel. So in this video, we've brought yet another interesting company which is into two sunrise sectors, that's electric vehicles as well as the telecom sector. And they are also looking at other new sectors like data center. So the company which we are going to talk about today is Exicom. This was a recent IPO with a tepid listing, but the results for FY24 led to a massive jump in the stock price and it has given a very good rally from the bottom. So in this video, we'll try to understand what has changed in the company in the last few months and what led to this rally in the stock. We'll also talk about what is the future of the company and whether it is right to invest in this company at the current levels or not. So if you're new to the channel, please to subscribe and hit the bell icon to get notifications of all the new videos that I upload. And if you are not a part of a Telegram channel, do join today by clicking the link in the description button so that you join the right Telegram channel. So let's begin the analysis of Exicom. So this will be the flow of our discussion. We'll talk about the business model of this company. We'll talk about both the segments, EV and the telecom segment. We'll look at the chart, the stock performance in the last few months because it's a recently listed IPO. Then we'll see the main financial parameters. We'll discuss the reasons why the stock price has jumped. We'll understand the outlook of the management going forward, their capex plans. We'll talk about the valuations of the stock at present. We'll understand the risks of investing in this business and then form an overall view. So this company is into two segments. The first segment is manufacturing of EV chargers and the second segment is manufacturing of converters as well as lithium ion batteries for the telecom sector. Now the application of this lithium ion batteries in the converters can be in fields other than the telecom sector, also like data centers and all. So the company is trying to venture into other spaces as well. So they are into this domain for more than 30 years. So there is a long legacy and an expertise of working and manufacturing these products. If you see the revenue bifurcation, roughly about 25% of the business comes from the EV chargers and about 75% from the critical power equipments which are used in the telecom and other sectors. Now this is a vertically integrated manufacturing unit. They do in-house R&D research and develop their own IPs for their products. Then they do the product, then they do in-house production. The software part is also developed in-house, which is very critical in all these products which they develop. And then up till the end of after sales support, everything is integrated and done in-house with their own teams in the company. When we talk about the EV charging segment, they are one of the market leaders in terms of manufacturers in India. They focus mainly on the residential EV chargers as well as the public EV chargers. They have done more than 65,000 installations till now in 400 plus cities in India, and there are three key things which differentiate this company from the others, or you can say there are three things which are key differentiators in this industry itself. The customization what they bring into the product, because there are many people in India and China and other countries who are manufacturing EV chargers. So how well they customize for their customers will be the differentiator. Then how well they keep innovating and keep increasing the efficiency of the chargers would be important. And also the software part, which is an integral part of the EV charger, will determine whether their EV charger is better than the others or not. So these are the products which they make in this segment. The first two ones, as you see, are for the home charging and the last two ones are for the public infrastructure. Now when it comes to the telecom or the critical power equipments which they make lithium ion batteries as well as DC conversion systems. So in DC conversion systems, they have about 16% market share, and in lithium ion batteries, specifically for these telecom equipments, they have about 20% market share. So they sell these products in India as well as abroad. When it comes to the foreign countries, they are more active in the Southeast Asian region and they have altogether deployed more than 5 lakh lithium ion batteries until now. So these are the products which they are manufacturing in the critical power equipments, indoor and outdoor power systems, hybrid power systems, then lithium ion batteries for telecom and lithium ion batteries for the data center space as well. So when you are buying such a company, you are basically playing three themes, which is the EV theme, second is the telecom theme as well as the data center theme. So that makes this company very interesting to study and to definitely keep it in your watch list for your future. These are some of the reputed customers which the company caters to. In the telecom space, they cater to Reliance, BSNL, Indus-Towers and Maxis, and in the EV space, they work with big OEMs like MG, Mahindra, and they are also working with oil marketing companies like Jio, BP, and also with EV companies or the aggregators like Blue Smart. Now, when you look at the stock performance, the IPO came at a price of about 142 and the listing was not that impressive because the last 2-3 years results were not that great. But the release of the FY24 results changed the entire shape of the company or the price. The stock was hovering at less than 200 initially, which gradually went up to about 300 and was consolidating in that range. But post the results, it has given a massive rally of up to 450 rupees. So from the IPO price, the stock has nearly tripled, and the trend is still upwards, and there are no reversal signs on the chart. If you look at the revenue performance in the last 4 years, in FY21 they did a revenue of about 500 crores, which went to 850 crores in about FY22 and dipped to 700 crores in FY23, which generally investors don't like, as there is inconsistent growth in revenue. But in FY24 it jumped to more than 1000 crores. When it comes to EBITDA, you will see a similar trend from about 30 crores to 67, then down to 50, and now to about 112 crores. In terms of margin, there is a steady increase in the margin, which is a good sign. From 6% in FY21, the margin has expanded to almost 11% in FY24. Now the adjusted ROC, because they went for a fundraising very recently, so if you exclude that and calculate the ROC, it is coming to about 26.5%, which is very impressive. And in FY24, the overall growth compared to FY23 was about 44%. But if you see the segment-wise growth in the critical power was around 59% and EV was just about 11% year on year. So from this you notice that the main contributor to the revenue is also critical power, and the main growth is also coming from the critical power segment, whereas EV contributes just about 25% revenue, and the growth is also very tepid in this segment. This could be because of increase in competition in this space, and the company may not be able to cope up with the maintaining their market share. So what do you learn from this is you should not just look at the prima facie numbers and the sector which the company belongs to and get too excited about it, because in this case the EV segment is not growing at par with the other major segment. Now what led to the rise in the stock price? The sales have bounced to about 1000 crores, then the margins have expanded from 6 to 11%. Both the sectors which the company operates are sunrise sectors, so the market is willing to give higher premium for the companies in these sectors. And the company is also coming up with a huge capex of about 170 crores in their new manufacturing unit at Hyderabad. Now, what are the growth plans of the company going forward? They are investing about 170 crores in a new manufacturing unit at Hyderabad, and the asset turnover ratio in this unit would be about 7 to 8 times. So the capacity expansion is going to be huge, and the revenue potential, which is from 1000 crores to at present, will be somewhere around 2500 crores after increasing the new capacities. But these capacities will start functioning from April 2025. So the impact of revenue will come in the year FY26. In the last quarter, they've got an order of about 270 crores, and the entire year of FY24, they've got orders about 1100 crores, which is almost the same as the revenue in FY24. They are looking at expansion in other countries other than India, specifically in the South Asian countries and the Middle East region. And at present, the capacity utilization in the critical power is about 68% and EV is about 92%. So unless that new unit in Hyderabad comes into picture, there cannot be massive increase in the EV infrastructure business which the company is into, because the capacity is almost near the maximum utilization. As we have discussed, the company is already doing pilot projects in the data center industry. So the same critical power segment will cater to data center along with the telecom industry which they are currently working in. When you ask the management about specific growth guidance, they are reluctant to do so, and they are saying that we are operating in sectors which are growing at a very rapid pace and we will grow in line with those sectors. Now when you look at the valuations, it is currently trading at about 85 times the earnings of FY24, and in terms of price to book is nearly 7 to 8 times. So these valuations do not leave much room on the upside for the PE re-rating, as it is already done. But looking at the growth which is possible in these sectors, if the company grows at, let's say, about 30, 40, 50% for the next 2-3 years, these valuations will be justified. Now, what are the risks of investing in this business? The growth has been consistent, as we saw a dip in the revenue in FY23 and also the profits. And the EV charging segment specifically is not growing at par with the overall growth of the company, and the growth is slower. There could be increase in competition as more and more people import products from abroad and install in India, as well as they start manufacturing. All the big companies like Tata Power and the other stalwarts in the industry will venture into these segments and give tough competition to companies like Exicom. In terms of valuations, as the stock is already re-rated, if they show degrowth in one of the years in the next 1 or 2 years, then the downside can be huge. And as they are doing new capex, now execution in terms of using those capacities should be quick, otherwise there could be an execution risk from the company's side. So now that you have understood the business model of the company, their stock performance, their fundamentals, their growth plans and the risks of investing, and also the valuations, what is our overall view on the stock? If you're already holding the stock, The company has delivered good results in FY24, and we are hopeful because of the sector tailwinds they will deliver a very decent growth of about 30-40% in FY25 as well. So if you can keep a watch on the quarterly results. If the company is moving in that direction, then you should continue to hold the stock. But if you see any signs of stagnant growth or degrowth in any of the coming quarters, then the valuations can get derated also. But if you're looking at a fresh entry in the stock at these kind of valuations, it would be slightly on the riskier side, and you should gradually accumulate or wait for a dip in such kind of stocks because of the recent run up. But as a sector, as a company with their own manufacturing capabilities, the stock should definitely be in your watch list. So that's about Exicom. I hope you like the crisp analysis covering all the important points of the company in just about 10 minutes. If you like it, hit the like button and share with your friends on WhatsApp. If you want me to make videos on your favorite stocks, don't forget to mention the names of the stocks in the comment section. Even this video we have picked up from the comment section as well. Do join our Telegram channel by clicking the link in the description button, as we share market analysis every day morning, which will help you increase your portfolio returns. Thank you for watching and have a wonderful day.